Welcome to the Phoenix program. Before you know it, we are already into the first quarter of 2021. 3 months has just gone by, and it just looks like yesterday. In December, I talked a little bit about the year ahead, and now we have only 9 months left into the new year. I'd like to encourage all of us to stand back, reflect on the past 3 months, and think ahead about what we might do and accomplish in a greater way for the rest of the year. More importantly, is to think about the positive environment that we will experience probably in the later part of this year, and really capitalize on the opportunities of the risks that we have identified previously, and look forward to implement them with rigor and bring about the business benefits in a more grandiose way. I hope to speak more with you in the coming months, but stay tuned for more of Phoenix. Thank you very much.
Willing hands and Phoenix hearts succeed.
Hello everyone, my name is Shania, and I'm a student at the Faculty of Arts and Social Sciences here at NUS. Thank you for joining us on today's Phoenix episode of Economic Outlook, Old and New Money. Before we hear from our first speaker, allow me to introduce you to this beautiful NUS Bukit Timah campus. The NUS Bukit Timah campus is an immersive garden-like campus located right next to the Singapore Botanic Gardens, a UNESCO World Heritage Site with rich variations of green from over 60 species of flowering trees and shrubs spreading over sloping lawns and grassy quadrangles. Now this campus is shared by the Lee Kuan Yew School of Public Policy and the NUS Faculty of Law. With that, let me tell you a little bit more about these two schools. The Lee Kuan Yew School of Public Policy is ranked first in Asia and 11th in the world by the QS World University Rankings in 2021. The school has graduated close to 2,700 individuals from over 80 countries and territories, equipping them with a genuine insight on Asia and the world. The school houses 4 very vibrant research centers. Their research and in-depth case studies touch on every aspect of public policy in Asia, from geopolitics, water management and urban planning, public housing and healthcare, and economic competitiveness, to education and the environment. The Faculty of Law is Singapore's oldest law school and the top-ranking law school in Asia, ranked 10th by the QS World University Rankings by subject in 2021. Each year, about 240 students graduate from the Bachelor of Laws LLB Honours Program, which is the standard route into entering any legal profession here in Singapore. The faculty also has a number of double degree programs combining law and economics, business, public policy, and life sciences. What I love about this campus are the pristine white historical colonial era architecture buildings in the neoclassical style. The earliest of these buildings have all been preserved under the law as national monuments. Now these buildings have all been equipped with modern lecture halls and classrooms, incorporating the latest technology to facilitate teaching and research activities. The perfect combination of old and new coming together. What better way to set the background for today's webinar on Economic Outlook, Old and New Money. Without further ado, allow me to introduce our very first esteemed guest for today, Professor Danny Kwok, who is the Dean of the Lee Kuan Yew School of Public Policy. Professor Danny Kwok, please. Professor Danny Kwok is the Lee Ka-shing Professor in Economics and Dean at the Lee Kuan Yew School of Public Policy, NUS. His research on inequality and income mobility characterizes the range of experiences across economies to suggest that a single narrative on inequality is unlikely to be correct or helpful. His work on world order takes an economic approach to international systems, studying the supply and demand of world order. What international system do the world's superpowers wish to provide? What world order does the global community need? Professor Kwok is also the author of the global economy's shifting center of gravity. Please share your view on Biden administration and geopolitical risks and the impact on the ASEAN community.
Okay, well, these are certainly large changes in the world, and we'd all like to see light at the end of the tunnel. We've got 12 months into a coronavirus pandemic. We've got a new US administration. Things seem to be on the move. 12 months where we've accumulated almost 120 million infections, where we've had more than 2.5 million excess deaths due to the coronavirus. A new administration from one, however it might have looked to the American citizen, for the outsider, for those of us who live in the rest of the world, 4 years of disruptive administration, undermining confidence in the international system, throwing mistrust into long-standing global alliances, casting in a confrontational way, demonizing China, totally changing the narrative of geostrategic competition. Whether all of this does signal light at the end of the tunnel is a matter of whether we agree on what the deep challenges have been these past 4 years, these past 12 months. For me, the critical question is trust and confidence in the political system. Going forwards, we need to ask ourselves, do the changes that we see bring back this trust and confidence? Because remember, in the midst of all the deaths and infections, the far deeper challenge from the coronavirus pandemic was whether illness and mortality would overwhelm national health systems. What does that mean? When the number of sick and the number of dying get to be too many, when ordinary people see frontline health workers succumbing to the illness, themselves outnumbered by the ill around them, what that means is choices to be made. Sick people will be turned away from hospitals. People will be dying in the streets. On the other hand, the Biden administration is hopeful and will change the way the international system works, we would like to think. America feels that China cheats, and it will continue to demonize China for China's attitudes on human rights, on privacy, and on its approach to the international trading system. So, do we see light at the end of the tunnel? Biden will have to navigate a difficult international landscape. On some dimensions, yes, there is light. On many others, likely not. Has new money arrived? Yes. Well, yes and no. By new money, we mean a digital asset that's used as a medium of exchange, daily transactions in goods and services, but not just any new asset. This is a digital asset, so there's no physical form to it. It's recorded as electronic transactions in a register. And what makes it new is that that computer database that is its register is distributed, not centralized. There are multiple copies of that all over the world, and it is kept safe. It is kept secure through a technology called blockchain. This digital asset is distinguished from old money, all other kinds of assets, in having this distributed ledger nature to the way in which its transactions are registered and recorded. And all of this we call crypto. Bitcoin, of course, is the first notable such cryptocurrency. Now, this distributed ledger means that for cryptocurrency enthusiasts, it's decentralized, and that means it is safe. It is safe from governments opportunistically engineering hyperinflation or other forms of arbitrary taxation and expropriation. But here's the thing. It still remains a financial asset, so it still means that it will be transacted in markets. Safety from this arbitrary hyperinflation does not mean safety from other risks. It's traded in markets, it will be moved by supply and demand, and like all other assets that get transacted in that way, new money will have stochastic returns. There will be risks attached, including notably the very real possibility of speculative bubbles and devastating crashes. The enthusiasts want to think that because there's no centralized authority, it is safer, and it is safe from arbitrary hyperinflation. But that does not mean it is safe from all risk. Historical examples, tulips, the tulip mania, Japanese real estate, new economy .com stocks, American housing in the run-up to the 2007 mortgage crisis. No central authority issued these assets, but all of them were subject to speculative mania and devastating wealth-destroying bubble bursts. The flip side of there being no decentralized control is that there is no one who will be able to guarantee a stabilization and a control over this financial asset to advance the well-being of the societies. Inflation stabilization is a way central authority controls the price on all money. There's regulation to minimize the chance of bubbles. So yes, new money has arrived. Its technology in blockchain, in crypto is well understood. But does that mean that all that someone needs to be concerned about with new money is the risk and return from its historical patterns? No. The possibility is very real that there will be speculative bubbles, devastating crashes, changes in the patterns of the price of this asset that are completely at odds with what historical pattern shows. So strap yourselves in, it will be an exciting ride.
So what about SMEs, the vulnerable segment, and what can they look forward to?
My advice to Singaporeans or anybody else who wants to participate in the market for new money, do feel free to make use of it as you would any other asset class. Do feel free to exercise due care with it as you would any other asset class. Take care on how when crypto is used as a medium of exchange, it can function exactly like old money. Do note that it is a distributed, decentralized database. You pay your money, you take your chances. Now, there are stretches of time over which Bitcoin, other forms of crypto, have had a good run of things. That does not mean that there are no risks associated with that. In fact, what you need to do is to think about what the underlying characteristics of this asset class are. Where does it attract value? Where is the traction against which it contributes to society functioning better? After all, that is what financial assets are supposed to do.
Finally, what is the economy outlook for the year 2021?
The economic outlook going forwards for Singapore, for Southeast Asia, for the world, the global economy has been devastated by the coronavirus pandemic. But we have to remember that economic devastation, which was terrible, it destroyed economic livelihoods, it threatened to make the poor even poorer. This came about not because there was a shock to people's confidence, not because people stopped consuming, wanting to raise their savings, not because people lost confidence and didn't want to invest. It came from an economic lockdown. And that lockdown was needed to save lives. And while we would like to think, with all the spending that's gone into the global economy, with the vaccines that are coming on board, we can resume life as normal, we need to continue to be careful still. We will continue to be mindful that we do not simply use our right hand to take away what the left hand put in place in protecting people. I am optimistic that going forwards we will be able to do that, not least in Singapore. But that's not the case everywhere else in the world, and we will need to be mindful of how the entire global economy evolves going forwards.
Mr. John Wilton has extensive experience in both the public and private sectors. He serves on the boards of 2 private investment companies and 2 non-governmental organizations. He was the recent past Deputy President of Administration and Finance at NUS before his retirement. He is now the CEO of Wilton Strategy Incorporated. Previously, he worked for 23 years at the World Bank, ending his career as Vice President for Strategy, Finance, and Risk Management and CFO. He's held a variety of important roles at various companies in his very distinguished career. One notable role was his position as UC Berkeley's Vice Chancellor for Administration and Finance from 2011 to 2016. In the recent environment of post-COVID-19 pandemic and under the Biden administration, what is your outlook on global trade?
Global trades are highly correlated with global growth. So maybe I'll just take a little time to talk about growth. So at least sitting here in the US, because Biden today, I think, signed the new American Rescue Package for 1.9 trillion. So if you look at just the US, it's pretty clear that there's going to be a fairly robust increase in growth. You know, forecasters are looking at, say, 7 to 8% quarter over quarter by the fourth quarter of this calendar year, which is very fast for the US. Now it's a bit misleading because you have a low base number. So you always have to look at, you know, those growth rates relative to the base number. But it seems pretty clear that there's going to be a pretty rapid increase in US growth. And one of the concerns, and maybe we'll come to that later, is, you know, what impact would that have on inflation? Because the output gap in the US seems to be like 600 million to 800 million, and the package is 1.9 trillion. So, you know, some people feel that it's doing too much. So I think you're going to have US growth, and then I think with a lag, you're going to have European growth picking up, and then with, you know, and then Japan, and China has already picked up. So, you know, I see like 21 being pretty robust growth on the back of fiscal and monetary stimulus. So I think given that, when you look at the trade numbers, it's a pretty clear story. So goods production has increased significantly, and goods trade, if you look at cargo traffic or the Baltic Dry Index, these things have picked up. So the movement of sort of physical goods in terms of trade volume is back where it was already, particularly in Asia and particularly with respect to China. Where there's a big gap is services. So that's things like tourism, transport, and other things that fall into the service trade. And those are way below. I mean, like tourism is about 40% below. If you look at numbers of people on American flights, it's about 40% below what it was. So you have enormous potential for a growth in the service sector. But again, that's massively correlated with the future path of COVID and what governments do in order to change the restrictive policies they've adopted to contain COVID. So in terms of total world trade, you know, to get back to your question, goods production is robust and looks likely to increase because of the pickup in world growth along the lines that I've said. Service trade is the area where there's a massive gap between potential and actual. And, you know, that will only correct as government policies change and the COVID pandemic gets more and more under control.
So, what is your view on inflation and impact on trade, especially in the context of SMEs?
A change in the price of good A or good B is not inflation. That's what markets do incredibly well, and that's why you don't want governments too much involved in markets. So Changes in relative prices is just that. So the price of A goes up, but the price of B falls. So if you looked at, say, the US, the price of services has declined because there's massive unemployment, and the price of some goods have gone up because there's shortages. So those things are not inflation. Those are changes in relative prices. And as you said in your question quite correctly, inflation is a systemic or a constant increase in the general price level. And for that to happen, you have to have a tight labor market because wages have to be going up in a constant way across the board. It's very difficult to see inflation picking up in the near term. So I think, it's important to understand what inflation is. Secondly, that doesn't mean that inflationary expectations don't change in the medium to long run. And the issue is, given such relaxed macro policies, that's fiscal and monetary policy, you'd expect inflation pressures to start to build in maybe a year or two along traditional sort of macro lines. I think where people go a little bit wrong, and I've seen it in my professional career, is that, Milton Friedman wrote what he wrote 40 years ago, and monetary policy's changed a lot since then. What is money has even changed, and the velocity of money, how we define it, has changed. Plus, the amount of world trade has changed dramatically. So even if there's price pressures, going to your question, in your domestic market for X and Y, somebody else will produce it and you can import it. But, with respect to Singapore, I find it very difficult to believe that Singapore would shut itself up enough from world trade that it would make a huge difference. So I think your SMEs are going to have to compete. And there's certain things you can't compete in Singapore. I mean, because you just don't have the scale to produce those products.
Now, the stock market has improved tremendously, while some businesses are still very cautious with the economic outlook. In your opinion, where are we in this situation?
That's a great question. I mean, looking at the US stock market, which I've focused on more since I've been back, you'd have to say it's priced to perfection. So going back to what I said right at the beginning, let's say US growth does pick up because of all the things I mentioned. You'd think earnings per share would pick up and blah, blah. So I think that's all priced in. So the US stock market is priced more or less to expectations and it being pretty rosy future in terms of growth. And they're factoring in inflation being under control because the central bank will remain very accommodative and will suppress near-term rates. I think it's rational that the yield curve would steepen, which has already happened. And as an aside, I'm so glad that while I was there, we floated a 10-year bond because 10-year rates have gone up significantly. So, I would anticipate, and let me say I've been wrong for quite a long time, that the stock market would correct at some point because it's unlikely that a completely rosy, perfect scenario will unfold. Something will happen that we don't know that will cause a disruption and the stock market will adjust. But by almost any measure, the stock market is very rich in the US. Now, let me say in emerging markets, that's not the case. But again, I don't like the term emerging markets personally, because Brazil, is very different from Peru, and both of them are very different from Thailand and are very different from some Eastern European economies. So when you aggregate the EMs, I don't think you get a useful answer. So I think you've got to look at each one of the economies. Singapore, coming back from what I know, and I'm definitely not steeped in Singapore macro, but the little bit I know is you're so well situated with massive reserves that you've drawn down. So you've financed your fiscal deficit with savings, which is completely different from the US, funded by debt. And your monetary policy is incredibly sensible. So I would think Singapore would go through the storms, but Singapore is in some ways, the stock market is highly correlated with the countries that you trade with. So no matter what Singapore does, its stock market's valuations will be determined by what happens in the world.
I believe you have a purpose. I will explore and
Miss Lisa Saludre is a serial entrepreneur who has invested her lifetime on the frontiers of deep tech pioneering, digital transformation, and innovation. She has served more than 400 multinationals and startups all over the world. As a general partner of R3I Ventures, Lisa supports many of the world's most promising early-stage deep tech companies in accelerating their growth. Lisa serves as an adjunct faculty member in the Singapore Management University for the Executive MBA and Executive Education programs. Ms. Lisa, can you shed some light on the topic of old and new money?
Old versus new money, which is better? Old money, as we all know it, the currency in our pocket, is a legal tender. It's tied to the US dollar typically, and it represents a value that is used for exchange. Cryptocurrency is a digital tender. It is founded in its roots in blockchain and is only validated as a digital asset. It can also be used to transact, but it has very different constraints.
Recent entrepreneurs are heavily promoting cryptocurrency, and the herd mentality is building up. Is this momentum sustainable? And what are your views on this momentum to replace cash in the future?
As someone who invested her 8 years of her life as an adjunct faculty member in luxury, this is a scarce resource, and scarce resources can be manipulated for the highest willingness to pay from a user, whereas legal tender is a fixed amount. This herd mentality driving up the value of a scarce resource is not sustainable. If people lose confidence in the asset, if people no longer perceive a value on the asset, this means that it is subject to great falls and great rises. This volatility is something that we need to manage as people who deal with cryptocurrency.
Ms. Lisa, please advise us on the institutionalization of this transformation in terms of timing.
One of the challenges that we have around the adoption of cryptocurrencies is regulatory and also the willingness of our traditional financial institutions to adopt. Getting end-to-end digital transformation over these very traditional financial institutions has been a slow process. And the other challenge is around the platform. We live in a platform economy. And when you live on a platform economy where you're moving from one location to another instantly, it gets rid of the middlemen. Not always profitable for a financial institution. The ability to adopt Bitcoin or any kind of cryptocurrency transactions creates an entirely new value proposition for the market. And in order for banks to adopt this, they need to move on digital transformation rapidly. I don't see this happening by the traditional banks short term. I do see this happening across the various neobanking actors in the ecosystem.
So, what are the risks for the general public?
There are a host of risks with any kind of digital currency, any kind of digital asset for that matter. And one is, of course, cyber risk. The security of your key is only as secure as you on your personal laptop. Whether or not that is hackable or accessible is entirely dependent on your personal security. How many of you have had an attack on your computers this week or an exposure of your own email and password? I had 56 of them in just the last 2 weeks, where my details have been exposed on the dark web. Securing our keys is something that requires a life cycle risk management approach, a continuous mechanism day by day in order to ensure security. The other challenge we have, despite the fact that most people are not cybersecurity experts, is actually the inherent risk of a digital asset that has a key that belongs only to you. How do I pass that on to my children? Once I am gone, the access to my digital assets is also gone. This means that, in fact, there is no pass down of my wealth to a third party. It just stays in the digital economy. The third aspect that is really important is that market volatility. Normally, a currency is underpinned by the central bank. If anything happens to that financial institution, there is some level of reliability and support for me to get access to my money. Unfortunately, the same does not apply to a digital currency. Quite often, these are not underpinned by the local market regulators, and indeed, if in fact something goes wrong on that platform, you will lose your money. And the last element is that volatility. One day my currency is worth one value, the next day it's worth another value. Being able to maintain our lifestyles in the ways that we've become accustomed with such volatility is a challenge, and an inherent adoption issue for others to be able to transact with us. The fact is, not everybody accepts digital currency, and until everybody does, whether or not this is going to go mainstream is a question altogether. That means that if I go to have dinner at a restaurant, maybe I'm unable to trade with my digital currency. And if that's the only currency I hold, I'm in trouble. So we have to think about the practicalities of user adoption. We have to think about those inherent market risks that drive the exploitation of that currency from one way to another, the lack of confidence that may cause it to have no value at all. And of course, the security of that asset and the constraints of us using that asset in a way that is both legal, taxable, and of course enables us to do what we need to do, which is to transact.
And let the whole world feel it. I believe you have a purpose.
We've now come to the end of today's webinar. Thank you so much for joining us today. Please do stay online for the Q&A session.